Hi there, I'm David from DB Chartered Accountants. One extremely important way of saving tax, or more precisely avoiding penalties and interest on tax, is to ensure that you do your self-assessment tax returns on time. Get the information submitted on the return correctly and completely, and pay the tax that is due at the right time. Any failure to do one of these will result not only the tax being payable, but interest and penalties too. First, let's look at the penalties for submitting your tax return late. These penalties will be incurred whether there is any tax payable or not. Your tax return has to be lodged within 5 days less than 10 months after the end of the tax year, which ends on the 5th of April. Thus the deadline is the 31st of January in the year following the end of the tax year. If you miss the deadline, then the penalties start to rack up. On the 1st of February, that is as soon as you are 1 day late, you get a penalty of £100. On the 1st of May, by which time you are 3 months late, you start to get £10 a day fine up to a maximum of £900 for the next 90 days for every day that it is late. On the 1st of August, when it is 6 months late, there will be a £300 fine or 5% of the tax owing, whichever is greater. And finally, on the 1st of February, when you are 12 months late, there is another penalty of £300 or 5% of the tax owing if this is greater. In addition to the late submission penalties, there are also separate penalties for paying the tax that you owe late. Thus, if you are late with both the return and in paying the tax owing, you'll be liable for penalties and charges on both. You've got 30 days to pay the tax that is due on the 31st of January before a 5% penalty is charged on it. Thus, be sure to get it paid before the end of February. On the 1st of August, when the payment is now 6 months late, there is a further 5% penalty on the tax owing on that day. And on the following 1st of February, payment which is now 12 months late, a third 5% charge is made on the tax owing on that day. Interest charge on late payment of tax. The penalties just mentioned don't include interest. HMRC will charge interest on any tax owing and also on the penalties and charges incurred as a result of the late payment of the tax that's owed. The rate of interest are amended from time to time, but the current rate can be found by simply doing a Google search. To get an idea of how these penalties build up, you can obtain an estimate calculator that HMRC provide, probably to scare the life out of you. Do a Google search for estimate the penalties on late tax returns. Then scroll down the page until you find self-assessment tax returns, penalties, gov.uk, to find this. I did the following example. I said the late tax return was for the year ended the 5th of April 2018. This should have been lodged by the 31st of January 2019, but it was not actually lodged until the 15th of September 2020. The tax bill was £5,000, was then not paid until the 16th of January 2021. This is what it calculated. The penalties amounted to £1,600. For being a day late, the penalty was £100. Then, after 3 months, the daily rates of £10 per day kicked in for the best part of 3 months, adding up a further £900, being the maximum amount for the daily penalties. At 6 months late, a further £300 was added. This was higher than the tax due of £5,000 at 5%, which only amounted to £250. And the same amount was added when it got to 12 months late. Thus the penalties were £100 plus £900 plus £300 plus £300 equals £1,600 as they calculated. The penalty calculated for paying the tax late was £750. This was £5,000 at 5% payable after 30 days being late equals £250. A further £250 when it was 6 months late, and another £250 when it was 12 months late. It also calculated the interest at £293.12p. Thus, the total amount due by that time was the original amount of tax being £5,000, plus the late filing penalties of £1,600, plus the late payment penalties of £750, and plus the interest of £293.12. to give a total liability of £7,643.12p. All in all, being late cost an additional £2,643.12, which is more than 50% of the tax payable. HMRC also stated in the estimate that the payments could be up to 100% of the tax bill if, in their opinion, you deliberately did not pay the tax. As well as getting your tax return in on time and paying the tax when it's due, it's also important to ensure that the tax return is completed correctly. If not, yes, you've guessed it, there are more penalties. HMRC have got a complicated basis of calculating the penalties for incorrect returns. However, boiled down, they are as follows. If you make a mistake on your tax return, HMRC will determine whether you have been careless with your return or if you were trying to mislead them over how much tax you owe. There will be no penalty if they believe that you have made an honest mistake. But nowadays it's becoming harder to get HMRC to accept this. They're more likely to charge between 0% and 30% penalty on the basis that they think that you have been careless. The penalties range between 20% and 70% if HMRC think you have underestimated your tax on purpose, and between 30% and 100% penalty if they think you have underestimated your tax on purpose and tried to cover it up. As we have seen, being late submitting your return, or paying the tax late, or if you've been careless or fraudulent in the completion of your return, this can be a costly affair. It seems obvious to state that you can keep your tax bill down considerably by submitting your tax return and paying the tax when you should on time, and by completing the tax return honestly and correctly. If you need any help with your tax return or just need some advice, please contact us on help@deb-accountants.co.uk, or you can telephone us on 01226 24 5824. Thank you for watching this video, and please subscribe to our YouTube channel to receive notification when we upload further videos to YouTube. Bye for now.